The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, so take a look at Tuesday's trade action. It was a pretty down day in the grains and oil seeds, even though the crop conditions fell lower once again this week. Traders, many traders anyway, taking a look at the weather forecast ahead for later in the week, and that seemed to give us the reasoning to take some profit off the table Tuesday. Here to talk about what's going on in the markets with us, we welcome in Brian Splitt with agmarket.net joining us today. Brian, always great to catch up with you and talk about what's happening in the market trade. I hope things are going well.
Yeah, well as can be. It's been a very active market over the last couple of weeks. So if nothing else, that's provided opportunity. It's just a matter of whether you chose to take advantage of it or not.
That's very, very true. Well, and I have to think overall, if you look at charts, I'd have to think it's probably a little bit looking like a Richter scale with an earthquake, maybe with the volatility up and down here and there, or maybe a 3-year-old drawing on it with a crayon. Just it's been so crazy volatile here the last 2-3 weeks, Brian, just across the grains in general.
It has, but it's trading a lot like a weather market in late spring, early summer, which shouldn't be new to anybody unless it's just your first time doing this. But, we made highs at this point for corn June 21st, and that's pretty much a perfect seasonal high. So if that ended up being the high, that shouldn't really surprise anybody. It always seems the most bullish at the highs, and boy, oh boy, it's felt awfully bullish there. But you just got in a situation where we didn't know what the supply disruption would be. We were pricing in declining yields, but I think everybody knew that once that was over, the certainty that we have in the market is that demand was killed with last year's rally. So that move to over $6 didn't do demand any favors. And I'm afraid we're probably going to have to go to some quite a bit lower values in order to get that demand to generate back in again.
Well, and I'm glad you brought that up because I think in the bullish euphoria of the weather rally, some folks maybe lost sight of just the ugly demand picture that's in front of us right now, Brian. And I think about, China getting a lot of their grain needs filled from Brazil and South America. Just the changing dynamics on the trade front, the demand picture, when it really boils down to it, U.S. commodities demand-wise, it's just ugly right now, Brian.
It is. I mean, we're just too expensive compared to our South American counterparts. And I was talking to a client this afternoon, and he said, "Well, I was reading a guy, and he thought that China is going to go on a big buying spree in beans when the South American bean crop is sold." And I said, "Well, all right, maybe, but when is that?" And he said, "Well, maybe September, October." And I said, "Okay, well, think about that. Even if demand kicks back in October, for example, you're going to have another South American bean crop that's going to come online just a few months after that. So if China wanted to, they could just fill the gap with a few months and then go right back to Brazil again." And so not that I think that that's what's going to happen, but the size of this past crop pushed back the time frame when they need to come to the U.S. And so it's going to disturb the cycle of their North American, South American purchases. So that allows them to go to our competitor for longer. And if we see another large crop out of Brazil, you may see another repeat of that all over again. So again, I mean, we have no idea what the Brazilian crop is going to be, big picture. We do know that at least early, the intentions and thoughts are that they're going to plant more acres. So that'll be something we're going to be dealing with. But Demand has just been a major talking point all year long. And you think about corn, we got to spring, and that was supposed to be the time when we saw the export program shift from beans to corn. And China did a little bit of buying. They did some aggressive buying, and I think it was March. And then they started canceling that, and that was a bad sign. So the safrinha crop is available. It's going to be another thing that is going to be competing with us, and that's a problem here.
It is a problem. And I know you mentioned this earlier, hoping that farmers took advantage of the recent rally, a couple days down here. I mean, obviously navigating a weather market can be emotional, but just trying to manage that risk. We talk about this all the time, Brian. It's just so important. And even though we have had a couple down days here, especially corded soybeans, there's still some opportunity there to manage some risk if you need to do some more in this market.
Yeah, and I think this is where it's really important to kind of keep a level head and stay on top of what you feel your own production looks like, and not get caught up on a lot of the chatter about other areas of the country. Mm-hmm. There's different ways to approach the market and participate in it. And so that's really been the conversations that we've been having is, okay, maybe you're in an area that is in a severe precipitation deficit. That doesn't mean that we should do nothing. Maybe that just suggests that we take a more conservative approach to hedging, and instead of selling cash or instead of going short futures, maybe we just look at options. So we're not overcommitting on bushels and look at puts. Maybe if you're in an area that's been getting rains and you feel pretty good about things, then you're in a situation where you should be getting more aggressive with your sales and how you participate in the market. But bottom line is that we saw this market get very close to the highs that we made last fall in October. I think within about 7.5 cents of those highs on the December corn contract. And that was a very actionable area to say, okay, I should do something here. And even if I'm wrong, and if it gets through the fall highs, I can jump right back out. Now, that wasn't the case, but you have to identify those points of where risk and reward match up. And let's be frank, 630 roughly on the board gives a lot of producers $6 cash. And I think that's why you saw such a wall of selling up in that vicinity.
I think that is a great point. Bean oil, surprisingly higher Tuesday. The other veg oils were lower. I know we've been watching soy products in general here as of late, and it's been a support area in beans to some extent. Any notes in bean oil? Any thoughts that you saw on Tuesday which contributed to bean oil actually being in the green?
You continue to see the spreading between bean oil and bean meal being one of the featured trades from the funds. Mm-hmm. And we obviously saw the bean oil market take a real steep breather, as we were getting through the news on the EPA proposals and what that was going to mean for future, renewable diesel efforts. And so that the bean oil market actually retraced exactly 50% of the rally that it had from the spring lows to the high on that several days sell-off. It caught, and now we're almost right back up to those highs again. And I'm looking at the August contract, September is actually the one I'm looking at. So back up to the 200-day moving average today, closed right at about it. So it was a pretty good close. But I still think the big picture long-term trade participants want to own bean oil for the renewable diesel story. And if that all comes to fruition, that's going to be something where we're crushing an awful lot of beans for the oil. And then there's another product that's created, which is the meal. And so we're going to have to really find a way to find a home for all that meal. And that might just be, spurring additional demand at lower values.
Brian, just quick on the wheat markets. I know we got various production problems around the world, but obviously demand for U.S. wheat is virtually non-existent. We're just way too expensive. Same story there compared to other places around the world. I wonder, though, the Black Sea issues, the attempted coup in Russia, seems like that was a non-event to the trade a little bit here, or came and went at least. So you look at the wheat market, Anything stand out to you there that you're keeping an eye on right now, Brian?
Well, I think if you are a producer and you watched wheat rally, and this is soft red, not the hard red, which is the area that has the growing concerns and the yield concerns. The soft red crop is the good crop of the winter wheat varieties. And if I'm a producer and I saw this soft red crop rally almost $2 off of the spring lows right into harvest, that's a heck of an opportunity to take advantage of. And that's all I'm really going to say about that.
Well, we're having a conversation today with Brian Splitt of agmarket.net. Brian, always appreciate your insight here and just common sense when it comes to these markets. I know this week we have quarterly grain stocks, acreage numbers, end of the month, end of the quarter. Got a lot of things in front of us here to wrap up the week. I have to think that's going to lend itself to some continued volatility throughout this market. What's your thoughts there?
Yeah, I mean, that's a lot of data that the trade is going to have to digest on Friday. And it's leading up to 4th of July holiday, which we know is also kind of a major pivot point or turning point in market psychology. So I think you have to be fully prepared that if that report has a sniff of a friendly bias to it, that you might need to take advantage of a higher trade Friday and get something in place before the weekend. Because I tell you what, I mean, if these models are correct, and who the heck knows if they are, we'll know after the fact. Mm-hmm. But I think the fund manager right now with the system that came through recently is thinking that the pattern is shifting. And now we've got, maybe 4 different systems that are going to come through over the next week that are offer at least a forecast of a good opportunity for rainfall in all of the growing regions. And if we get some of these systems to come through into central southern Illinois, central southern Indiana, and really do some healing, at least in the fund manager's view, for the areas that are continuing to decline in ratings and conditions, then I think you're going to have a very tough market coming out of the 4th of July holiday. So I think if we were to maybe revisit the 200-day moving average, which is going to be around the 583-ish area, December corn. So let's just say roughly 20 cents higher than where we were kind of late session today. That's probably an area where you need to at least think about managing some risk in case we do get that bad move out of July 4th. Because I tell you what, if that's what the market is going to start trending and doing, we're probably going to sell off into the August WASDE report, big picture. Maybe you get a shot lower coming out of the July 4th weekend, find a little support before the July WASDE, just with the trade expecting that the yield is going to come down, which it most likely will. But will it be enough to really make the balance sheet bullish? And I think the answer to that is no.
Well, Brian, I should mention as well, I know you guys there at agmarket.net released your acreage estimates ahead of Friday's USDA numbers. And corn, you guys had 91.85 million, soybeans 87.65 million. That's a little higher than USDA's March estimate. And then all wheat, a little bit higher than USDA 50.07. Maybe you can just touch on that real briefly. Any thoughts you'd share with some of those numbers that you guys found ahead of the USDA numbers, Brian?
Yeah, you know what? I think if our numbers came to fruition, I don't think it would really be a market mover. I mean, we're only talking a couple 100,000 in each crop, one way or the other. So, the thought was that maybe with values doing what they were doing into planting, that we may have seen a little bit less corn get planted from the intentions, and some more go to beans. A lot of double cropping in beans behind winter wheat. And really, there could always be surprises, right? So maybe the USDA does have a surprise on the acreage side, but it's probably more likely that we see a surprise on the stocks. Just generally, if there's a number that adds or subtracts 100 million bushels from the corn balance sheet, it's probably going to come from stocks rather than acres. But I think, we've seen there's some good strength in July corn versus September corn. That spread really took off this week. It was trading down around 45 last week, made it up around 75. I don't think that's something you should get bullish about. I think that's a function of two things. we're going into delivery on old crop corn. So as we go into delivery, you're going to see that contract outperform the new crop. The funds are not long July, right?
Mm-hmm.
So when they did their, just in the mechanism of the market, and when they got out of their length and went short, they didn't come in and buy July again. Why would they when they only have a short period of time to trade it? So they were buying all September and December. And so now that they're liquidating longs, that liquidation is in the SEP and Ds contracts. They don't have longs to liquidate in July. So I think as we go into Friday and as we go into first notice day, you could probably see that July SEP spread continue to stay strong, would be my guess. And then we'll see what the stocks say. If the stocks are bearish, that spread will take a big break. If the stocks are friendly, then you might see that spread do what it's done in other years of tight stocks like your 2012 and 2021, where we see July trade $1+ plus over SEP while it's in delivery. That wouldn't surprise me. But again, don't let what this July contract is doing sway your thinking on how to market your new crop.
Awesome thoughts for sure, Brian. Let's touch on livestock just a little bit. Cattle, nice day Tuesday. Feeders especially, I have to think the obvious one, taking advantage of cheaper corn prices there throughout Tuesday's trade. Brian, any thoughts on the proteins?
Yeah, so the placements in May were a little bigger than expected, but I don't know that should be a surprise, because you think about what corn did in the month of May, and we saw futures for new crop trade below $5. So the ability to lock in cheaper corn values versus what we've seen all year long was there. So I think that really spurred some additional placements. Maybe things back off a little bit because of what we did during the month of June. And then maybe we see placements kick back in at some higher levels as we approach late summer, early fall, especially if the corn market continues to break. You look at feeder values, and we made that strong low last week, the exact same day corn topped. So we're seeing a very good relationship of corn down and feeders up, and feeders down and corn up when we're rallying the grains. Feeder cattle in the August have an island bottom. So we kind of hit some major technical points. We had a nice uptrend in place. We came down, we tested the uptrend. We traded there for a couple days. We had gapped lower going to test that trend line, and then we started to build a base and then gapped higher at that same spot. So that's your island bottom. We gapped higher again today, which you would typically call your measuring gap. So the first one's a breakaway gap. Second is your measuring gap. So I think if you're in the feeder cattle market right now, just keep an eye out for a third gap. That's generally referred to as an exhaustion gap, and that third gap will be relatively close to whatever the high for that particular move might be. So if you were a buyer of feeders on this break, maybe keep an eye out for that third gap as a signal to place some stops under your position, or find ways to book profits. I look at the live cattle, and I kind of focus quite a bit on the December contract, and looks to me like we broke out of a bull flag pattern to the upside, and so that would measure to new contract highs. So hopefully that can come to fruition over the next several months. And I think the future today in hogs was bull spreading. We had the fund manager go from record short to now long, and I don't see them going and changing their position that drastically just to get short again. So I think you're going to see some continued buying in the hog market, at least for a little bit, on these summer to late summer contracts, July, August, and then we'll see what these winter contracts want to do on that rally.
Definitely. And I know with hogs too, we got a quarterly hogs and pigs report coming up on Thursday. The market's going to be watching that as well. Brian, I know you guys have a lot of great analysis available, discussions. You can talk with folks if they have questions about their marketing plan. And I'm sure probably the best way is to check out the website or reach out with a phone call, isn't it, Brian?
Yeah, website is easy, www.agmarket.net, right? Go figure. And phone number for our general line is 844-424-6758. So 844-4AgMarket.
Fantastic. Again, online, agmarket.net. Brian Splitt with agmarket.net. Always great to chat with you, sir. Have an awesome week. We'll talk to you again soon.
Yeah, you too, Jesse. Thanks a lot.
That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.